Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, I'm back behind the mic, fired up, because I'm going to show you a stock today for which I've used multiple times writing covered calls and using the cash secure put. I pocketed 31% cash on cash, knocking it down. And I'll tell you what, I'm fired up because I'm going to use it for another covered call. And in about 30 days, I'm going to have a cash secure put come off the board, pocketing even more money. I love the volatility in this stock. Actually, I love the volatility in the stock market. So I'm going to show you how I use a stock multiple times to generate income. Money on the table. You know what this channel is about. It's about me being in retirement, needing to generate cash flow in retirement. Right? I don't want a part-time job for which I have to go punch a time card. I want to use my portfolio, generate real money on the table, paying the bills, living the good life without working a side job. I don't want to go to work anymore. I want to do it from my laptop. And I'll tell you what, I want to do it from anywhere in the world. And you can do that when you sell premium. Look, if this is the first time you've ever been to my channel, do understand all we talk about is probably the second oldest investment strategy on the planet. And I'm always fired up because I'm winning. I love having success, man. I used to swing trade, day trade, and I was losing all the time. Now I win, and I love it because it keeps me in the game, keeps me excited, and we're enjoying it. I'll tell you what, absolutely love it. So let's go ahead and get to this. I'm going to talk two stocks. I'm also going to talk about why I want volatility in the stock market, okay? So if you've never been to my channel and this stuff interests you, I want you to subscribe to the channel. I come back every week, show you timely and relevant selling premium trades, trying to up your game. Okay, I have been doing this for 5 years, thousands of trades under my belt, knocking it down. I want to pay it forward because my mentor, Jerry, paid it forward to me. He's the one who taught me this, got me interested in this. And I'll tell you what, ever since then, I've been having success. On YouTube, the people that make money in the stock market are the people that sell premium. The people that talk about buying options are the gamblers. They are the ones that typically lose. And I'll tell you what, because I sell premium, I am the seller to those gamblers. They pay me. See, they pay me just like a casino. You pay the casino when you go and play, and typically you lose. Well, guess what? I'm the casino. I'm the house. They pay me, and I typically win. Hey, look, my track record proves it. I'm going to show you my P&L here in a second. But look, if you like anything you hear today, I want you to bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is talking about volatility. I'm going to show you two trades today for which volatility works both ways. One stock has no volatility, but we're still able to use it to generate income. The other stock has hella volatility, knocking down serious income. Volatility is the name of this game, okay? When the stock markets are more volatile, we get higher premiums, right? When the stock market tanks some 10%, that's when those call options and put options get juicy, depending on which way the market's going. It's just a matter of fact. That's how this works. And I'll tell you what, why I want the stock market to correct right now is because this market is doing nothing but going sideways to higher. Everybody has FOMO. They don't want to miss out on another upward tick. Now, I'll tell you what, September and October are typically the months when we get hammered with a nice correction. Don't know if it's going to happen this year because people are anticipating that nice Christmas rally. They don't want to miss out. And I'll tell you what, I'm wishing we do get the correction because I want the volatility. Look, 2 years ago in 2019, we didn't have much volatility and I made $49,000. I didn't even meet my goal of $55,000. Now, that was a great year by all measures. And I'll tell you what, absolutely love knocking down some 22%. We get into 2020 and all of a sudden hell breaks loose. And once that happens, the markets jump into volatility mode. The market crashes 50%. And oh yeah, it crashed. We were able to use that volatility to make hella premiums. We were using great stocks and they were giving us big premiums. A lot of people say, look, John, you could find all this volatility. There's a couple websites you go, you sort based on volatility, you pick the highest stocks, the fattest premiums. What I've told you over the years is this: we don't want to do our research from the premium back. We don't do that here because, like I've always told you, we will never do the things we have to do to make sure that is a good stock to own, right? That's the number one golden rule in selling premium. We gotta want to own the stock. So when we look at the high volatility, we look at the fat premiums, we never work our way back to the beginning. See, part of my training and what I try to stress to everyone, we need to start with a great S&P type company. We need to start with something we feel comfortable with, something we are passionate about, right? Dividends, profits, right? Then we look to see where they're at, when they're going to have their dividend, how much they pay, what kind of volume they have. Look, at the end of the day, we always start our research from the company down to the premium, not from the premium back. Because like I've said, you'll never get back to where you need to be to make a good decision. But with that said, I want volatility. And when the stock market is correcting, which by the way, is good for the stock market. You can parallel that with earthquakes, right? When earthquakes have those little tremors, it's releasing that pressure. Right? If you do not release that little pressure, you're going to have one big slam and, of course, massive destruction. Little tremors release that pressure. So when the big one comes, it's not that big. That's how the stock market works. If we don't have little 5%, 10% corrections, we're going to get a big one. Just like in March, we got a 50% sell off in the Dow. That's why I love volatility. Because also what I've told you on this channel is this is where people make the fastest, quickest, sexiest money. Wall Street. Okay. Back in the 50s, 60s, 70s, it was just a different Wall Street. Today, with internet trading and all of the possible volatility, I'll tell you what, to make the fastest, quickest buck, it's Wall Street. So they stay in the game. And with the Fed printing all this unbacked money, there is no money in the bond market. So all those income investors have to get in the stock market to make income. So Wall Street absolutely has a free pass to buy stocks. Okay? You got to get that wrapped around your head because that's how this works. I have embraced that. I 100% embrace that. You follow the Fed, you follow Wall Street, they're going to take you to the money. Okay. So when I hear people saying there's going to be a crash and people are going to go broke, I just chuckle and I wait for those moments because I'll tell you what, I love to buy low to sell high. And a lot of people, they coil up in a fetal position when volatility strikes, man. You can't find them anywhere. Where are you going to find John? I'm going to be knee deep in the volatility, knocking it down like I did last year. Let's go ahead and get those two stocks because I think you're going to find this interesting. Okay, enough of the rah-rah, John. Show me those two trades. Here they are. Early July, I noticed CSX, right? That railroad company, they were hitting support, meaning they had fallen off. They hit my wheel report. I noticed that they had fallen to support. So I started doing my research on CSX and I wanted to show the members. So back in July, I sent them a Seeing the World Through John's Eyes. I saw this. I would have acted on this had I not had 7 other stocks. But I love showing the members what I see. Whether I invested in it or not, I want them to see what I see and for them to then start their research, right? It's all about getting ideas, getting good quality ideas. And that's what I try to bring to the members. Back in July, I told them a covered call at the money would be an awesome play. Now, I wrote that email and sent it to them. It's been 60 days. And to be honest with you, I write so many emails. I mean, on my homepage, I said I send 380 emails this year so far. I think I'm now over 400. I try to send my members quality information. It's 60 days later. CSX hits my radar again because they are now oversold. And it reminded me that I sent them this email. So I went back and looked at the email and I wanted to see what would have happened with the covered call and what I would have done. Now, do understand, if you've been watching my channel, you know this is exactly what I would do. This is not pie in the sky. What you're about to see is exactly what John would have done, and I think you're going to like it. So here's the setup. Back in July, I sent out a Seeing the World Through My Eyes email on CSX. CSX had fallen to support. it had a nasty sell-off. You could see it right there. That huge red spike is when I wrote the email. Now, what I said there was this. We could go ahead and buy the shares. It was trading around 32.58. And we can write the 32 near the money covered call. Some would say it's in the money by 58 cents, but okay, in the money by 58 cents. And we would write that covered call. We get 95 cents. Now, for me, that's a near the money and that 58 cents. This stock will move 58 cents in a day or so. So it was an at the money, near the money covered call here. Fast forward 30 days. Remember, everything with me is 30 days. I can care less what happens after that. And CSX is trading under 32. So we would have kept our shares, and notice it trades sideways. We would have kept our shares, we would have collected the 95 cents, and we would have been there August 2nd with our shares. This is what I would have done. With CSX having a dividend, I would have loved to do a dividend capture with cover call right. We're using the same investment, right? If I had 100 shares, I would have invested $3,200 and I would have done it again. We repeat and rinse. We don't let our selling premium shares sit on the bench unless they're seriously down and we have to wait for them to come back. That's what we would have done. August 2nd, we would have sold the same 32 strike. We would have picked up 75 cents in premium. We would have probably held the shares through the X date, pick up another 10 cents. The trade would have ended. We probably would have kept our shares again. Notice the stock is trading for $31.69. We would turn right around and sell the 32 out of the money, probably collecting another 75 cents. And for me, CSX trades in this range. They are a great keeping the lights on trade. And yeah, they had hit a much higher high earlier in the year, but this is where they're trading now. They are range bound in this 31 to 34 range. And I'll tell you what, those premiums do not look as juicy as the next stock I'm going to show you, but those are the kind of trades retirees can use to keep the lights on. Right? You place that easy swing and trade, make that decent premium. That puts money on the table to pay the bills. Right? These are the kind of trades we want to learn how to do because in retirement, these are going to pay for your bills. What I'm about to show you with the next stock, that kind of trade lets you live the good life. Let's go ahead and check out that trade. But this is what my members get. They get this. I don't just write emails and move on. A lot of times I have a tracker for which I track my picks because I want to be able to go back and talk about them. Because when I do an email on CSX and it falls $5, I'll get members saying, John, what the hell happened? Hopefully, we win more than we lose. Remember, I have a free month for anyone that wants to see what I'm doing over at the membership. Go to my website, cptdashboard.com, click Upgraded Dashboard. I got a 1 free month offer for you. 1 free month to be a part of something great. Go check it out. If any of that interests you, would love to welcome you aboard. All right, here's the star of the show. I know if you're new to the channel because you read the clickbait title saying I'm hoping for the next stock market crash, do understand what we do here is sell premium. I need a part-time job in retirement. I need to pay the bills. I want to live the good life. Making money in the stock market, we do that with selling premium. Now, if you don't know what selling premium is, just go to YouTube, search covered call writing, cash secure put selling. Get your pencil out, write it down. That's what we do here. We sell premium. Now, talk about volatility. We're talking Marathon Digital, Mara. Mara's a stock high volatility traders love to use. Mara is a Bitcoin mining company. They literally have two or three employees and they have banks and banks of servers mining for Bitcoin. Now, of course, it's going to be volatile because Bitcoin is volatile. Cryptocurrency is volatile. But I'll tell you what, like I told you before, I'm not going to invest in the currency. I'm going to invest in the miners. So back in April, and you can see my trades here at the bottom, back in April, I went ahead and I did a fat cash secure put on Mara. Actually, I had some members mention Mara to me. I sent out a Seeing the World Through John's Eyes where I talked about Mara. I made $3,200 on that cash secure put on Mara. I was able to acquire the shares at $39. Now, if you know me, you know that my cost basis is based on when I get the shares, not using my premium for cost basis reduction. I'm in retirement. I spent that $3,200. So using a stock for which my cost basis is $39, this is where the stock has been trading since I did that cash secure put. Now, notice when I did the cash secure put, Bitcoin had hit a high of 60-some thousand. Everybody's excited about Bitcoin. Well, of course, the Bitcoin miners are going to be pushing higher as well. It fell from the high 50s to 39. And that's when I thought that would be a great time to get involved, because when it fell below the Keltner channel mid and then rallied above it, right? And it almost stayed above it. I'm thinking this could be a great new starting point for the stock to trade sideways to higher. So I did the 39 cash secure put and I got stuck to shares much lower, but that's all right. We're going to go ahead and be assigned the shares and now execute on our plan. What's my plan? Obtain the shares. We write covered call. So notice the first thing I did when I was assigned the shares, I went ahead and wrote a covered call. That was about a 32-day covered call. And as you could see, as the stock's treading water and moving sideways, I was able to buy that option back because it wasn't going to finish above my strike price. So I go ahead, I buy the option back. So let me give you an example. Say I got $5 for that first CCW, covered call right. The stock's trading sideways to higher. I picked a strike price that might be $5 higher. It doesn't get to the strike price by expiration. Now my option for which I got $5 is trading for $1.10. Because remember, the option trades in sync with the stock. And with the stock not above the strike price at expiration, well, that option starts to have time decay in it, right? Time decay works against it because, remember, if a stock doesn't finish at the or above the strike price at expiration, it goes to zero. Remember those gamblers I talked about earlier in this video? That's where the gambling part comes in. Because if anything, I still have my shares. I have the money they paid me. They have a big fat zero. So, sure enough, I buy this option back. What do? Turn right around. It's trading at that Keltner channel midline. See that line in the middle of the chart? It's trading at the midline. I go ahead and write another 30-day covered call. Well, look at how it plays. It does not reach the strike price again. I buy that back, and tell you what, I write another covered call. Now, that covered call that I wrote, that last covered call, with the stock trading right around my strike price of 39, I was able to write a fat covered call, collect almost $2,500 in premium. I am happy now. I am now green if they take my shares. And I have collected so much money. Well, didn't happen. What happens is Mara peels off just like Bitcoin does. It's trading at 35x. Now that $2,500 premium, well, I bought that back because I got $5 for the option. Stock is now trading for below $2. I have a golden rule. Within the first 2 weeks, if my option falls more than 50%, I buy it back and I look to write another covered call, extend out the expiration. I try to keep this spinning plates of profit going. Well, I bought that back on Friday for like $1.70. I ended up pocketing $1,250. That's money on the table, man. I counted it out. 12 $100 bills. Well, that week I decided that Mara was going to push higher. They actually had really good earnings. I have no fear owning Mara. Went ahead and sold another cash secure put for another 500 shares on Mara. And I'll tell you what, I'm going to probably own 1,000 shares of Mara. And we're going to be able to do exactly what you see here. Because once you learn the characteristics of the stocks you're trading, you're going to be able to play the game just like I'm doing here with no fear. And I'll tell you what, that can put real money on the table. Now, as of right now, my cost basis is 39. On 500 shares, I invested $19,500. I've made $6,220 in on the table profits. I've actually closed trades, put the money on the table. That is 31% cash on cash. And that does not include the cash secure put I just did on Friday. I'll tell you what, when we learn how stocks move, they're in our basket of stocks. We can go back to them time and time again. And what have I always told you? At the end of the day, when I get involved in a stock, I do not get upset if the stock falls. Look at Mara. Mara fell some 10 points during this time. I don't care. I'm going to spin it, right? Spinning plates of profit for covered calls and cash secure puts. right? That's what I do with my selling premium stocks. So for me, it's not about buying a stock and it goes higher. For me, I buy a stock and I try to write as many covered calls as I can using that investment. And this $19,500, I'm going to look to use it for another covered call. And I'll buy that one back. And I'll do it for another covered call and buy it back. I'll tell you what, at the end of the day, selling premium gives us an opportunity to make money when the stock has done nothing. Look at that chart. That stock has done zero. But yet John has $6,220 living the good life. See, when you learn this from me, you're going to be successful. And that is what this channel is all about. Now, if you're still here on the video, then that means you're interested. You really need to join my membership, man, and be a part of something that is absolutely wonderful if you're asking me. I'll tell you what, I'm going to send this email out this weekend on Mara to the members. Look at Mara's trading pattern recently. This thing has fallen off, traded sideways to higher, and it started to get traction. And now look at where it's at. Can you see what I see? It's building a great line of near-term support. Now, does it go lower? It very well could. I mean, you look back here and that could be a line of support as well. But look at that line of support that it's been bouncing off of. This might be that opportunity to get involved in Mara. We are buying without the fluff. See, we got fluff here. We got fluff here. When John buys into stocks, we do not buy here. We do cash secure puts on huge down days, hoping we get a move, or we're getting involved when they're at the bottom near support. I learned that years ago. I've lost so much money getting involved in stocks when they're at their highs. I always love a stock when it's pushing its 200-day moving average. And for me, it's worked. I don't know about you, but for me, it's worked. When I get involved in a stock that is trading lower than higher, gives us more opportunity to move higher than lower. Hey, look, remember that one free month. Over on Facebook, I'm going to be posting up about my 401k challenge, for which I'm going to be looking to make $30,000 to $40,000 a month using my 401k. Yeah, we need to generate money in retirement. That's what we talk about here. And I want you to join me. I want you to stick around. So subscribe to the channel. And if you like this video, bang that like button. It lets me know you like what I'm doing. Till next time, be safe, be healthy. Most important, be lucky. May all your covered calls be profitable.